Hey guys, what is going on? Welcome back to my Robinhood portfolio. Today I thought I would take a closer look at inverse ETFs. I put out a video yesterday describing a very unique way of playing a down market. When there's a big market pullback, investing in inverse ETFs is a very high risk but high reward way of making a profit as the market trends down. And in doing so, there was a lot of questions about exactly what an inverse ETF is. So I thought I'd take a little bit more focused approach and talk about inverse ETFs and describing exactly what their goal is. To do so, I'll take a look at a couple different market stocks here that are trying to replicate and actually are leveraged against the S&P 500 as well as Nasdaq, and then taking a look at their counterparts, which are essentially inverse of what the market is doing. So up on screen here we have UPRO. This is a ProShares Ultra Pro S&P 500 stock. You can see on the bottom there, it's providing a 3 times leveraged daily exposure to a market cap weighted index of the largest and most liquid U.S. companies on the S&P 500. And you can see here early morning trading here up 1.31% before trending down a bit here. And essentially, an inverse ETF would be doing exactly the opposite of what this particular stock is doing. So if we take a look at STS, this is another ProShares ETF, but this is an ultra short. So you can see on the bottom here, this is providing a 2x inverse exposure to many of the same companies that UPRO was essentially modeled after. And you can see as this trends up here, the inverse ETF trends down, and as the inverse ETF trends up, the UPRO shares trend down. So basically inverse exposure. And it gets a little bit complicated to exactly what the particular underlying securities are in this ETF with regards to the inverse ETF, a lot of futures contracts and other very sophisticated financial products. But the important part is that you're expecting for this particular stock, the market to go up to make a profit, but the inverse, if the market goes down, you make a profit. So pretty simple idea behind that. It gets a little bit more complex with the underlying securities, but needless to say, there are a lot of different ETFs like this, both 1x, 2x, 3x, non-leveraged accounts as well. The same holds true for the Nasdaq. So SQQQ is inverse ETF of the Nasdaq. Again, 3 times inverse exposure. If we go to the regular QQQ, you can see this is simply trying to replicate a modified market cap weighted index of 100 of the largest Nasdaq companies. You can see as this trends up, its counterpart trends down here a bit. And you can see here's a leveraged account trying to get some exposure to a modified market cap weighted index, again, of the largest Nasdaq companies. This has 3 times exposure, so this just moves a little bit more quickly than QQQ here. You can see this is up 0.92% at its peak here. This is up a bit more here, 2.73 or so. Again, because this is providing 3 times exposure, and this is simply 1 times exposure, non-leveraged account here. And SQQ is a 3 times inverse exposure. So again, this should be pretty much identical to the TQQQ. So here, the nadir is 2.7%. If we go to TQQQ, the top is about the same here, 2.65, 2.73%. And as this is trended back down here, 1.04%, you would expect this to be down about that same amount here. And it roughly holds 1.3, 1.12. So really just inverse ETFs are a great way of shorting the market. On Robinhood, you cannot short the market in a traditional fashion. And just a quick reminder what shorting is. Basically, it's kind of a margins account. You would basically borrow a stock from your broker, sell that off, and then hopefully the stock trends down. Then you'd buy it back at the lower price, give that stock back to the stockbroker or your brokerage account, and the difference in the price you would keep. So a quick example would be, let's say you wanted to short a stock that was worth $100. You just want to short one stock. So you'd basically borrow that stock from the broker, but you'd have to pay the broker an interest rate on that time period that you borrow that stock. So let's say you pay 6% interest APR. So you borrow that stock, sell it off for $100. Now you have $100 in your account. Let's say the stock trends down to $50. You buy that stock back, give it back to the broker. Now you have a difference of $50 which you keep, minus any interest that you owe the broker, depending on how long you had to short that particular stock. And all the rules for margins accounts apply. So it gets a little bit complicated. So ETFs are a great way of getting around all of that business with margins accounts and short positions and having to pay the brokerage account a commissions fee, as well as margin calls and all that sort of thing. So a great way of trading a market if you think the market's trending down. And again, these other stocks here are great ways of trading the market if you think there's going to be an uptick in the market. Again, some of these move very quickly. The leverage accounts move very quickly, so these are not things that you should be holding for a long period of time. And another key point I made in my last video too is inverse ETFs are short-term products only. I would even say holding these overnight is way too risky. It's simply a technique that day traders can employ. Swing traders can employ these as well, but you do not want to hold these for a significant amount of time. If you hold these more than a couple days, I say that it is way too long. And like I said, I wouldn't even hold these overnight. So again, there's a lot of different ways of doing this. So I kind of went over inverse S&P 500. I also went over some inverse Nasdaq stocks. Here's another stock here, an inverse of the Russell 2000 index. So there's an inverse ETF for whatever component of the market you want to short. Here's a ProShare Short Financials. You can see on the bottom here, inverse exposure to a market cap weighted index of U.S. financial services companies. DDQ here, you can short oil and natural gas companies. GDXD, you can short gold industry. 2X, inverse exposure to market cap weighted index of global gold and silver mining firms. Here's another very unique one, VIX. You basically are providing some inverse exposure, leverage exposure to the VIX futures position, basically a measure of volatility. I put out a video quite a while ago about this. I might do an updated video to kind of remind you guys what VIX is all about. So a lot of different products that can be utilized, shorting whatever part of the market you want to, whether that be the S&P 500, Nasdaq, Russell 2000. There's financials, industrials, whatever particular part of the market you want to short, you can do. Financials would be a good one right now. So yeah, just wanted to quickly update you guys on some of the products that can be used in an inverse environment, basically shorting on Robinhood. Again, Robinhood doesn't have the ability to short in a traditional sense, but you can definitely do it through inverse ETFs. Great ways of making a profit when the market is pulling back. But again, do not hold these for the long term. These are simply to be held for maybe 1 day, maybe 2 days, but you would not want to hold these for the long term. And if you look at the long-term outlook on a lot of these shorts, you can see here, you would essentially lose all your money holding these long-term. These are rebalanced on a regular basis. And I believe it was one of the Nasdaq shorts. Basically, it's down 100%. Let's see if I can find it here. You see this one's down 80% here. 57. One of them was down 100%. Let's see if I can find that here. I think it's the VIX futures. Yeah, here we go. So this is, simply to be used only on a very short-term basis here. If you were to have held your money, it's essentially zero now. And these are rebalanced on a regular basis as well. And like I said, a lot of these are futures products, futures contracts, other more sophisticated investment products. So they're not meant to be held long-term. So yeah, just wanted to quickly review inverse ETFs. If you guys have any questions, leave it down below in the comment threads. If you guys have any other good ones, a lot of these stocks here were mentioned in the prior comment thread, so thank you very much for that. There's a few I didn't go over, but there's a ton of different inverse ETFs out there that you can choose from. I just picked a few of the more well-known inverse ETFs, as well as some of the more well-known leveraged accounts for the S&P 500 and Nasdaq. So yeah, kind of with that, I'll end the video. As always, if you enjoy my videos, feel free to like, share, and subscribe. If you guys have any good video ideas, let me know. Thank you very much for prior comments on some of these other inverse ETF products and other products you use when the market trends down. Definitely appreciate that. And yeah, kind of with that, I'll end the video, and we'll see you guys next time.